All right, you guys. So this is the timetable here for the new term, September. This is the business studies timetable. On Monday, we have PoA Form 5 from 6:30 to 8 p.m. On Tuesday, we have PoA Form 4, 6:30 to 8 p.m. Wednesday is Econ, Form 4 and Form 5, you all at 5 p.m. to 6:30. And Thursdays, POB, Form 4 and 5, 5 to 6:30. This is just the business studies timetable. All right, so you all have my contact number in the chat. I'm just calling it over for those who would have missed it. You all could get me on WhatsApp at 678-2487. All right, so again, this is the business study. So please take a picture. This is what we will be working with. These times are not going to be clashing with any other times, any other subjects, that is. So we can try our best to work with these times here. All right, so for today's session, we are looking at section 8 of the syllabus. All right, so I know you all are sending me your contact numbers. Please send it to me, yes, via the chat. You all can send it to me there. And during this time, during this week, I will be adding you all to the Google Classroom, but I'll be WhatsApping you all some additional information that I may need in case your Google account is not working. So please keep your phones nearby. The numbers that you all are sending me, it is your WhatsApp number. All right, because that is what I will be using to reach out to you guys. So again, my number 678-2487. And this is for all these subjects. This is for PoA for those who are doing Form 4, which was yesterday. For those who are doing Form 5, which is today. All right, so we are again going to continue with the syllabus, the last week of the summer program. So you'll get away with a little exam, but for September, we'll be making up for the 2 topics that we would have completed throughout the summer. We completed financial statements with adjustments, and we were able to look at some questions with the adjustments. And now we are going to be introduced here to partnership accounting. Partnership accounting is in section 8 of the syllabus. We will be looking at this, and hopefully by the end of this class, we'll be able to look at a question as well. All right. So for those who would have missed any announcements at the start of class, I will be repeating them at the end of class as well. So section 8, accounting for partnerships. So we looked at sole traders from the start of this session, from the start of our summer program. And you all would have seen that the final accounts of a sole trader, it would have consisted of, the income statement, also called the trading and profit and loss account. We look at the balance sheet, which is also called the statement of financial position. For this session here, we are looking at partnership accounting, and you're looking at the final accounts of a partnership. But first of all, let's start off with, what is a partnership? So a partnership is a type of business organization in which 2 or more individuals pool money, skills, and other resources and share profit and loss in accordance with the terms of the partnership agreement. A little complex, a little long, but you'll get the gist of it. We would have done this in so many parts of this whole summer program. We looked at partnerships in POB. We looked at partnerships at, when we were looking at the intro part of POB, different types of organizations. It's an organization with 2 or more individuals pooling funds together. The Partnership Acts usually govern partnerships. So I'm stopping there. For those who are new to this subject, with partnership accounting, there are different ways in which we can present our financial statements, depending on the agreement in this partnership business. Not all partnerships are the same. Some might say, all right, we make a profit. The whole partnership business made a profit. You take half, I take half. That's one agreement. The other agreement can be, I want 80% of the profits while you'll take 20% of the profits. That's another agreement. And therefore, our financial statement will have to reflect what the agreement is stating. So what is on the slide here on point number 2, partnership acts. It's a type of act. When you think of acts, you're thinking of a law, something with law, right? Some legal thing that's happening in this organization. So it will usually govern the whole partnership business. The sentence goes on to say that the Partnership Act of 1890 includes the following provisions, which are important and apply to partnerships unless the partners have agreed to varying terms. In the event there isn't a partnership agreement, the following terms should be applied. So as I said earlier, not all partnerships will be governed by the same rules and regulations. They will have something totally different. But if not, if they don't have something totally different, in that there isn't any partnership agreement, they have to go along with what the next slide is saying. We have to be governed by the Partnership Act of 1890. And yes, you guys, you'll have to remember these points. You are not writing a law exam, you're writing PoA, but this is part of what you need to note under the Partnership Act of 1890. So this act is basically saying all partners are entitled to contribute equally to the capital of the partnership. All partners are entitled to contribute equally to the capital of the partnership. Partners are not entitled to interest on the capital they have contributed. Partners are not entitled to salaries. Partners are not to be charged interest on their drawings. Partners will share profit and losses equally. And partners are entitled to interest 5% per annum on loans they make to the partnership. All right, so the Partnership Act of 1890 basically stipulates this here. All right, so if they do not have any agreements, they have to follow this. And you all will see how very important this act is, because in the question, they can say, this partnership is not governed by any agreement. So in that case, you have to remember how are the partners going to be sharing up their profits. So note these points just in the event that they do not have any agreement. But let's just say they do. Let's just say they come together and they agree on certain conditions to govern the partnership. These agreements will be called the deed or the partnership deed, partnership agreement. So being a legal form of business operation, partnerships are governed by a partnership agreement or deed. This is where they come together now and they set out what they want in the partnership. We are no longer using the 1890, the Act of 1890. We're using the deed. They come together and this is what they said. The clauses. 1, capital to be contributed by each partner. They can decide on how much capital each partner is supposed to contribute. The rate of interest to be paid on capital, it will not be fixed. It will not tell you, you have to pay this, you have to pay that. No, the rate of interest will be decided upon every member of the partnership. The rate of interest to be charged on drawings. So I'm going back for a second, you guys. You know, when I see something that deals with what is going to happen with this partnership, I want to just compare. We said that they are not entitled to salaries. They are not to be charged interest on drawings. They are not entitled to interest on capital under the Partnership Act of 1890. But when they come together now and they say, let's not use the Partnership Act of 1890, let's create our own agreement. Tom, Dick, and Harry, let me decide on what is fair, what we want to do in our partnership. So they're deciding on the rate of interest to be charged, on capital, on drawings, on loans to be made by the partners of the business. They'll decide on the interest to be charged on loans made by the business to the partners, salaries to be paid to the partners, if any, and lastly, the profit and loss sharing ratio. The agreement said that profits and losses are to be shared equally, but that's not fair sometimes. They say, you know what? Based on how much, let's say, for example, what you bring into the partnership, we would use what you would have brought in. We will create a ratio. So whatever our profit is, you get that portion of that ratio. Tom gets that, and the other persons will get something else. All right, so this is only under the partnership agreement. So if there's no partnership agreement, they have to use the Partnership Act of 1890. And unfortunately, the Partnership Act of 1890 says that profit and losses have to be shared equally between all the partners. So just bearing that in mind, you guys, the partnership agreement, it will have, if they do not have that, we will have to use the Partnership Act of 1890. Anybody confused? This is just two ways in which a partnership can be governed, either through the Partnership Act of 1890 or the partnership deed, or also called the partnership agreement. Just some thumbs up so that I can just move on if you're all okay with what the slides were saying. All right, good, good. All right, so again, if you are confused, please message in the chat exactly what you need me to clarify. So basic stuff again, we just want to just cross out all that we need to know about partnerships, which is the obvious advantages and disadvantages. So I should have asked you all, I could still take some points from you guys, as in, I have been making notes on, contribution, participation. I have your notes. I'm seeing my future students with distinctions. So partnerships, I sure you all would have remembered this from PoB when you all would have done it, whether with me or in school. Partnership advantages. We said that all the disadvantages that you will see under sole trader, well, most of the disadvantages, you will see them as an advantage for the partnership. I told you that's how we could remember what these advantages are. So with multiple owners, the business has a richer source of capital to be contributed. So there is an increase in capital contribution compared to the sole trader. Sole trader only him alone contributing his own capital. The second advantage we have here, multiple people with diverse skill sets run the business, which can enhance its overall performance. And you know what that means? With enhanced overall performance, that is talking about increase in profitability. We want to aim for those profits in a partnership. The third advantage that we're seeing here is a great experience just brought into the business. There is shared responsibility, and the burden of a loss is shared among more than one person. All right, so we know this, we appreciate this, we are okay with this. But the disadvantages of a partnership, we have it listed here on this slide. Profits must be shared or appropriated between partners. There is disagreements, and control is shared with partners. As such, important decisions take longer to be made. All right, so one of the leading disadvantages that you will see in a partnership is profits have to be shared equally. Could you all remember? So I'm testing you all here. I know you'll hate the word test, but no, don't hate it. I'm testing you all for those who are listening. Profits are to be shared equally. Under which one? Is it the Partnership Act of 1890 or the Partnership Agreement, the Partnership Deed? Tell me in the chat. Which one says that the profits are to be shared equally? The Partnership Act of 1890 or the Partnership Agreements? So I'm seeing the majority giving me the correct answers. So let me just go back. Let me just, I like to see what the answer is. Let me go back. Let me go back a little bit. In the previous slide, we said, let me go back a little bit more. Partnership Act of 1890, partners will share profit and losses equally. That's only under the Act of 1890. But with the agreement, we can share our profit and losses in some kind of ratio. It could be what they would have invested in the business, etc. All right, so that's something important to really note in your multiple choice for CSAT. You all are going to see these questions and we will be getting the practice of these types of questions. All right, so just note this, write it down if you think you might forget. So you all know the main disadvantage amongst a sole trader and partnership is if the business goes into, let's say, bankruptcy. What is that? What is the term called? Or what is that main disadvantage that you will see between a sole trader and a partnership? That main disadvantage that just stands out. It starts with you. It's 2 words. Giving you all some hints here. What is that main disadvantage between a sole trader and a partnership? Very good. Unlimited liabilities. All right, good. I'm making note of all your names. So, I know for those who starting in September with me, you all will definitely, well, for the rest of you guys, I know you all know it. It's just the words are not coming to your head. I know it's that. So that's cool. So unlimited liabilities, meaning that disadvantage whereby if the partnership goes bankrupt or the sole trader goes bankrupt, personal assets of all the partners must be used to pay off the liability of the business. And we always making the examples of these personal assets. Personal assets could be your house. Continue, you guys, message me. It could be your house. It could be your car. It can be jewelry. It could be your dog. Yes, Destiny. I know you're always paying attention, right? So personal assets will be used to pay off the debts of the business. If you cannot pay it off, the bank will come and hunt you down, hunt your dog down, get your house, get your car, get them fancy jewelry, that's all you have there. That is what will happen if there's ever bankruptcy in the business. All right, so you all okay with this? So final accounts of a partnership. So we're getting down to some real business here now. So the final accounts of a sole trader, remind me, we just have the income statement, which is trading profit and loss, and the balance sheet. Only two. But with a partnership, we will have, yes, the trading and profit and loss account. We have something called the appropriation account. We have the current account, and then we have the balance sheet. We could knock out the first one, we could knock out the second one, we could knock out the last one. So really and truly, what are the new things that we're going to learn today is just the appropriation account and the current account. So you'll see how very easy it could be to really pass this exam. Once you know the format of at least the trading, profit and loss, the balance sheets, just have to fit in just these two, and you're safe to get a good 15 marks to 20 marks in your partnership question. Please be mindful that in the exam, all questions are compulsory unless otherwise stated in your instructions. But so far, it is compulsory, so let us get down to what the appropriation account speaks of and the current accounts. So the appropriation account is an account which shows how profits and losses for the period are divided among the partners in a partnership. How the profit and losses are to be divided or shared. When you think of appropriation, we want to distribute, we want to portion out what we have in the business. So it is a final account used by the partnership firm to show the distribution of net profits. You think all partnerships will always make a profit? Guess what? They could also make a loss, and it will be distributed amongst the partners as well. So whether it be a profit or a loss, it's going to be distributed amongst the partners. This distribution is done in accordance with the partnership deed or the partnership act, whichever is in effect. So whether we are using the Partnership Act of 1890 or the partnership deed, there is going to be a way in which we are going to distribute our profits and losses. Are you all okay so far with the appropriation account? This is all you need to note. We're going to get down to the format in a bit. The current account is also going to be amongst partnership firms. And this is an account used to record on one side all amounts owing to the partners by the business, and on the other side, all amounts due to the business by the partners. So think of the current account like a capital account of a, let's say, a sole trader. You all know capital accounts always have a credit balance. So credit balance is what we always leaning towards. But if there's a debit balance, which is on the other side, all amounts owing to the partners is by the business. Right? So we will get down to that in a bit. I just want to give you all this theory part, the understanding at least of what this really means. And we have the current account used only when fixed capital are maintained in the books of accounts. So fixed capital meaning that nothing is added or deducted from the capital figure. So you would only use the current account when fixed capital is maintained in the books of accounts. So we have a question. So we actually finished the theory part of partnerships. So basically, everything that we would have learned is just 4 new things we would have learned in this topic, because everything is very similar to what we would have looked at in the other accounts. We looked at what a current account is. We looked at what the appropriation account is. We also looked at what the Partnership Act of 1890 states, as well as the partnership deed. All right. So we have a question that I know, as much as I want to do some past papers at this time, you know, I am always eager to do past paper questions. But I want to start you all off with something very simple for those who are new to this subject area. Well, to this topic, that is. We have a question in the next slide. Just get it. A question on tea and leaf. Now, this question, I want you all to, when you all go up on YouTube and you all are reviewing this recording, this is a question that we will correct for the new term. Okay? Tea and leaf is a question that we are going to be correcting for the new term. So, in other words, this will be a homework question for the new term. And we have the additional information. So we are not going to do this question here now. We will not be doing this question. But for the new term, we will be starting with this, because I mean, this is our last summer class. So you will make an attempt, a good attempt to this question that we are going to do in class right now. I am going to share the screen to what we are going to be looking at today. It's actually, for those who have the textbook, which I hope that you all have by now, the Frankfurt textbook, we are looking at the 5th edition, page 291, question 26.1. Sorry, this is partnerships, right? So we are looking at a question here. Oh gosh, you all not seeing the screen. Hold on. I don't know what just happened here. I thought you all were looking at it. Great. You all seeing the screen? Just making sure. I don't know what just happened. You all seeing the screen, right? Yeah, okay, good. So we have a question here in the textbook, exercise 34.5. So that's what we're looking at, 34.5. The name of the question is Mendes and Marshall. So Mendes and Marshall are in partnership, sharing profits and losses equally. So they already told us how we are going to share the profits. You don't have to try and figure it out. They're already telling you profits and losses are to be shared equally. The following is the trial balance as of June 30th, 2007. So we have the debits, we have our credits, and we have the list of balances. So I'm going to try to make this a little bit smaller for those who do not have the textbook. I'm encouraging you guys to please put your hands on that, get the textbook for the new term. I won't always be typing out the question. It is just to do the question with you guys. So please, this is the question here. 34.5, Mendes and Marshall. So you could just take a picture here. And we have some additional information. The instruction is saying, prepare trading and profit and loss account for the year ended 30th of June 2007 and the balance sheet as at that date. The first additional information we have here is stock 30th of June 2007, 56,340. Expenses to be accrued, office expenses, $96, wages, $200. Depreciate fixtures 10% on the reducing balance method and depreciate buildings, $1,000. Number 4, reduce provision for bad debts to $320. Number 5, partnership salary, $800 to Mendez, not yet entered. Number 6, interest on drawings, Mendez, $180, Marshall, $120. And number 7, interest on capital account balances at 10%. So these are our additional information on Mendez and Marshall. So we are actually going to be doing this question together, and you all are going to be assisting me with it, because the first part to this partnership account, we have to prepare our trading. We do it in order: trading, profit and loss, then the appropriation, then the current account, then the balance sheet. I'm repeating these steps. You're first preparing your trading, your profit and loss, your appropriation, current account, then balance sheet. So we're gonna do it here now. So we have here, so you all know I just missed out a first. So the first important one is to put the name of the business. So you all should have told me that somewhere in the chat or something. Let me see if anybody messaged me in the chat. No. So they know, they don't want to lose a mark in that exam. So you're putting your headings first. So I will not be going back to the screen as much, you guys. So please take a picture, screenshot it if you all are using your cell phones. Have this information at hand, because we will be using everything here into this screen. Right, so we're looking at 34.5. If you all have the other editions, I'm not sure what page it may be, but this is under the 5th edition, 34.5. You're looking out for Mendez and Marshall. So you're starting off with the name of the business, Mendez and Marshall. And what are we preparing? A trading and profit and loss appropriation account. This is what you basically have to include. Akila, thank you. So for those who are using the 6th edition, it's on page 338. Thank you, Akila. All right. So Mendez and Marshall, and what we are preparing is our trading and profit and loss appropriation account. What do we put in the 3rd line? So you all are assisting me here, right? We are doing this together. What goes in our 3rd line? Good. So Shalon, we are going to put the date being for the year ended June 30th, 2007. So we are going to prepare now the trading account. So how we go about preparing the trading account, you're going to put your $3 signs. That's in each column. Then you're starting off with the first heading, well, the first item being sales. How much was the sales figure? How much was sales, you guys? 123,650. You are correct, Kila. What's our next item? What's our next part of the format? What do we do here? All right, Destiny, I've seen your answer. Carissa, good. We less our return inwards. Very good. Was there any return inwards in this question? I don't think it had any. So you know, whenever you less your return inwards, you're going to get your net sales, which is the difference between our sales and our return inwards. And our amount is 123,650. So you all got some good marks there already. So we're moving on. Next part of this format is, very good, Destiny, less cost and Amari, very good. We're gonna less our cost of goods sold. The first part under that heading is that we have our opening inventory. How much is our opening inventory, you guys? So this is a trick question. Very good. Ariel, we are using the one that is in the trial balance. So that was actually a tricky one because sometimes those who just see stock outside the trial balance might think is your opening stock. No, stock outside the trial balance is our closing stock. So good, we have our opening stock. From our opening stock, what do? We add our purchases. Was there any purchases in this question, in this partnership firm for Mendes and Marshall? Yes, I'm seeing some figures here from you guys. Trishana, good. 85. 85,416. So when we get our purchases, we have to now add in our carriage inwards. So you know I'm going to stop here. And I feel that you all could definitely give me my gross profit. So I'm going to pause and I'm going to let you all continue for the next 5 minutes, 5 minutes tops, to get me the gross profit. And I'm going to make note of the information in the chat that you all are giving me. Don't feel intimidated. You all know this stuff. Take this 5 minutes and prepare the gross profit figure. All right, so your 1 minute is up. I saw that some of you were able to give me the correct answer for your gross profit. I gave you a little hint of air on what to include to your gross profit figure. Some of you all got it. Some of you also probably scratching your head. What is Miss talking about? Let's see. Let's go ahead and start including these figures. So carriage inwards. You all had anything for carriage inwards? That should be a no. All right. What comes after carriage inwards when you add it to your gross profit? It should give you something called your gross purchases. So gross purchases will total 85,416 because there was no carriage inwards. So we have our gross purchases. Right now, we should less our return outwards. I hope you all had that as your next format. Let's return outwards. And how much was it? It should be 0. There was no return outwards. And when we less return outwards, we get, net purchases. our net purchases is still 85,416. So we have our net purchases figure and we have our opening inventory. When we total the two, what answer do we get? What is the name of that answer? It will be, well, when we total it, we'll be getting 127,395. And what do you call this figure? Our cost of goods available for sale. You'll see how I abbreviated the term here. Don't do that in the exam. Write it out. The examiners might be like, what does that this mean? Just write it out just in case they don't know abbreviations. But I just put it in short to save some time. So we have our cost of goods available for sale. The next thing that we do is less our closing inventory. And our closing inventory, which is outside the trial balance, is 56,340. And that is how I know you guys were able to get, when you minus these two, we will get our cost of goods sold figure as 71,055. That's our cost of goods sold. How do you know if you got a gross profit or a gross loss? Is that we're going to minus our 123,650 and our 71,55 to get our gross profit. And that is where I know you all had reached. So 52,595. But there are other information that should be added to our gross profit to get that final gross profit figure. And I also you all remember to look at your additional information. They said something about it was note number 4. Provisions is to be reduced, 320. So provision for bad debts here was 400 and it reduced to 320. So how much did it reduce by is what you ask yourself, which is $80. So we're gonna add, and were there any discount received? There was none. Just give me a second, just fill this in. We had a decrease in provision for bad debts, which would have been the difference between the 400 and the 320. Right? So I'm just putting the working here for you guys. 400 minus the 320. That will give us 80. Was there any rent received? Was there any rent received? Was there any commission received? Any more receivables at all? No. So as a result, I just want to just put it in so you all will remember that is part of the format, which is 0. So our final gross profit figure is when we add everything here. So this is equal to, 52,675. You add your gross profit and your decrease in provision for bad debts. Let's get to the profit and loss side, where we're going to less our operating expenses. Were you all able to complete that? Did you all get all the net profit? Message me in the chat if you all did. No? All right, let me work on it here together. So our operating expenses is what we are going to less. The first one in this question, let me see. We have a few, oh shucks. Right, so we have a few expenses to account for, right? So the first one we have here is office expense. And what did it say about office expense? So we're looking at office expense being 2416. And they said that expenses to be accrued, office expense 96. So we said accrual to be added to the expense. So that is why you would have your 2416, add your accruals, which is 96, to give us 2512. That's our total office expense. The next expense we had in this question was wages. And in the additional information, it said something about wages also being accrued of $900. Wages in the question is 18,917. Are you all seeing it? It's highlighted. So wages in the trial balance is 18,917. Wages accrued of 200, we also add. All accruals we add. So 18,917, add accruals of the 200, and we will get total wages being 19,117. The next expense we had was discount allowed, which is 115 from the question, nothing affecting discount allowed. What other expense we have? We have bad debts being 503 because bad debts is an expense. We also had carriage outwards, which is 1288. We had another expense. You're seeing these here, right? I'm just calling out all the expenses from the trial balance. It doesn't have to be in a particular order once you account for it. So after carriage outwards, we have loan interest of $4,000. Loan interest, $4,000. What other expenses did we have? Well, we know depreciation is an expense. Not the provisions, no provisions, just the depreciation is the expense. So depreciation of fixtures. How are we going to account for this here? So let's look at it together. You all need a minute to just take down this here. You all okay with what we have here so far? Are you all okay with this? Yeah, all right. So we're gonna look at the depreciation here now. So going back to the question, this depreciation fixtures, 10% on reducing balance method, reducing balance basis. So we're identifying our fixtures at cost, is 11,000. The provision for depreciation of fixtures, which is 3,300, and we have to get 10%. So you should be really finding out the net book value, and then you calculate your 10%. That is what the reducing balance method states. You find 10% of your net book value. Net book value is equal to your cost price minus your provision for depreciation. So 11,000 minus your 3,300, then you're finding 10% will give us our depreciation expense. So 10% of the difference. I'm pretty working here for you all to always go back to. And how much you'll get for when you calculate it. So 10% of the difference. How much you all got? Very good. I'm seeing your correct answer, Keela. 770. Right? There was also a depreciation for something else as well, which is depreciation of buildings of 1,000. So buildings at cost is 50,000. They said it depreciated. Depreciate buildings 1,000. So they told you the answer already. Depreciation of buildings 1,000. So you don't have to calculate anything. They told you it's 1,000, you put 1,000. Make sure that that's all the expenses we have to account for. Anything else missing? No, no, no. Anything across here? No more expenses. So as a result, we can therefore get our total expenses being total of 25, everything in this column here. 29,305. 29,305. So a net profit or net income will definitely be the difference between our total income minus our total expenses, which is 23,370. That is our net income. So just a quick thumbs up from you guys, if you are okay. There's nothing new here so far. We did this throughout the summer program, trading, and the profit and loss. You all okay with that? Now we are getting into the partnership side, where the format starts from here. We're continuing with our net income. You see, I didn't draw any line under this 23,370 because I'm going to continue with my format, which is the appropriation account. The appropriation account is saying that when we get our net income, we have to add interest on drawings. Interest on drawings. So I'm not going to give you all any notes on it. I'm just going to verbally explain it to you guys, what interest on drawings is. And for the new term, I will go in depth for those who may be still confused. So interest on drawings is basically the interest the business charge the members for taking out money. So you come and take out money from the partnership, we're going to charge you an interest, and that money will definitely be adding to our income, right? We want to keep the money in the business, but if you're taking it out, we're going to charge you. And when we charge the partners, we are going to get additional profit. So what did they say about interest on drawings here? Interest on drawings, Mendez, 180, Marshall, 120. So Mendez, 180, Marshall, which is the next one, 120. So that means our total available profits that we actually have in this partnership, it moved from 23,370 to 23,670. It moved from this to this. And now, since we have all our profits accounted for, the next part of the format is very simple. You're going to now distribute this profit. Very simple. Very, very simple. You're going to distribute this profit amongst the partners. So we're going to have the heading, less appropriation. We're going to distribute it. So there are different ways you can distribute it. The first one, the first part of the heading is saying interest on capital. So Mendes and Marshall, they said that they're sharing the profit and losses equally. They have some interest on capital at 10%. Interest on capital, you guys, very simply put, this is where the business will pay and interest to the partners just for bringing in the capital in the business. So once the partners brought in capital in the business, guess what? The business have to pay the partners. So that is going to definitely decrease our profits. So we're lessing our appropriation. They said Mendez, Marshall, 10%. So Mendez and Marshall. So interest on capital account balance at 10%. Interest on capital balances at 10%. So Mendez brought in 35,000. I'm just highlighting it here. So you all will see it in yellow. So we're going to find 10% of what Mendez brought in, and the business is going to pay 10% of what Marshall brought in. 10% of 35,000 is 3,500, and Marshall 2,950. 10% of 29,500 is 2,950. So that's your total. When you total everything here, you get 6,450. Good. So we just decreased our profits by 6,450. We have some more decreasing to do. Salaries will also eat up this profit here. So salaries is what we have to account for. And they said, so this is just a format, you guys. When you look at the question, you will know, all right, what else are they going to distribute? What else will they take out from the profits? They said here, partnership salary. Mendez have to get $800. So Mendez have to get $800. Marshall getting any? No. So that means our total salary that are going to be distributed is $800 to only Mendez. All right. So basically, that's all. We had our total available profits because we accounted for interest on drawings. We're going to less the appropriation. This is what we're going to distribute our profits accordingly. And now when we have our interest on capital totaling $6,450, salary totaling $800, our total appropriation, our total distribution of our profits total to be $7,250. So that means we had originally $23,670, then it gone down to $16,420. But it ain't done yet. The $16,420, how much money is going to get from this? How much Marshall going to get from this? It is stated in the question. Let me just look for it. Let me see, where did that note? So depreciation, partnership, just on drawings. Where did they say how we're going to distribute this profit? So we had to keep looking. In accounts, your eyes have to hurt. You have to look all over the question to see how they're going to distribute. Mendez and Marshall are in partnerships, sharing profits and losses equally. Very, very important. Profits and losses equally. So we reached to the end of the appropriation account. Now we're going to distribute the profits. The $16,420 will be shared equally amongst Mendez and Marshall. So the share of profit is our next heading. Mendez is going to get a half of $16,420, which will be $8,210. So a half of $16,420, $8,210. And Marshall going to also get a half of $16,420, which is also $8,210. The share of the profits, Mendez get $8,210, Marshall get $8,210. It will total $16,420, and right now, the partnership reached down to zero. We share all the profit amongst Mendez and Marshall. So you all, this is just a little more than half to what we really just have to complete this whole partnership account. Because I'm seeing the time, I just want to stop here, but you know we're going to continue. There will be a continuation and a recap of this entire lesson. Again, for those who might be still confused, there will be a continuation. At this time, announcements are going to be made. So you all can have your little pen and paper or your notebook. Just write these information down for registration for September. All right. So for those who are journeying with me and well, all the subject areas, this is how the registration is going to be. First of all, this is the timetable for all the business studies subjects. PoA, Monday and Tuesday. Well, one is for Form 5, one is for Form 4, and Wednesday and Thursday, we have Econ on Wednesday, POB on Thursday. Registration, you all can send me your contact information, as well as you all can take mine as well, right? We have 678-2487. I sent it in the chat, so you all could definitely WhatsApp me. During this time, I'm going to be preparing the Google Classroom to admit you all in from next week, please God. But you all will need to create a Google account. So if you all did not do so yet, you all have this whole week to do your Google account, because that is where I will be sharing the materials to you guys. That's the only way that you all will be able to get it. All the recordings will also be there as well. If there's any other questions at this time or any additional information that I have to share, I would obviously send you all it on WhatsApp. Please note that this number I'm sharing with you all is just a temporary number for now, until we actually start the ball rolling in September, where we'll be put into groups. Okay, so look out for that as well. And yeah, you all, I can't believe the 4 weeks has completed for the PoA Form 5. All right, time really flew by, but you know what? We still have some time again until exams. That is what is most important. So please come out September to complete the syllabus. We're aiming for those distinctions. I know you all will get them. If you have any questions, please WhatsApp me, and you all will soon be admitted in the classroom for September. It really was a pleasure really teaching you guys during this term, this 4 weeks. And I hope to see you guys back for September. It should be more interactive. I'm going to ensure that it is more interactive, where I'll be able to hear you guys, get to know you guys a lot better. All right. So thanks again, everyone. I'm still here for any questions that may be asked. I'm still here, so you all could message me in the chats. But for now, bye, you guys.